There's a lot of chaos and uncertainty in financial markets right now. You literally hear it across the board. Recession, recession, recession. Well, maybe it is coming or maybe it's not. But it's important for you to understand exactly how to prepare for a potential recession. Now, if we go back and we look at the last two recessions, we know in 2008 that ultimately there was a liquidity crisis. That means that investors looked at their portfolio and said, I'm scared. What can I sell in order to get dollars? They sold everything from stocks to bonds to commodities, real estate, and anything else that had a liquid market attached to it. They simply wanted dollars. Now, ultimately, that liquidity crisis in 2008 played out for about 6 months. The government then stepped in. When the government stepped in, they came with monetary stimulus, both using monetary and fiscal policy in order to right-size the market. Ultimately, many assets then rallied and ended up hitting all-time highs in their prices. If we then fast forward to the financial recession of 2020, the pandemic was raging. The government mandated people to go sit inside of their homes, and there was another liquidity crisis. It played out over just a matter of weeks. Every investor looked in their portfolio. They were scared. They wanted to sell anything possible so that they could get dollars. They sold stocks, bonds, commodities, real estate, cryptocurrencies, and anything else that they had. They just wanted the safety of the dollar. And ultimately, that liquidity crisis was reversed when the government stepped in with monetary stimulus, using monetary and fiscal policy to right-size the market. And many assets then rallied and hit all-time highs. If we are to head into another recession, don't be surprised if there's another liquidity crisis where investors look at their portfolio. They're scared. They sell stocks, bonds, commodities, real estate, and cryptocurrencies, and they go for dollars. Ultimately, though, what people understand is that the government is addicted to monetary stimulus. They cannot avoid stepping in. They have to use monetary and fiscal policy because if they allow a recession to continue, then the ultimate loser is the everyday citizen. Politicians are in the business of preserving their political power. And ultimately, they know if they don't step in with monetary and fiscal policy, then their citizens will vote them out of office. And so if we go into a recession, that liquidity crisis will likely be met very, very quickly with monetary stimulus, from quantitative easing to the manipulation of interest rates even further down. In that scenario, asset prices will then rise. The way that I personally play any sort of recessive type activity is that I'm gonna buy and buy and buy. I've got cash that I've been sitting on that says whether it ends up going up or down in financial markets, I continue to just dollar cost average over time. I want to simply dollar cost average into great assets and then hold them for forever. But if we happen to have a recessive period where asset prices are falling in an aggressive manner, I'll actually accelerate my dollar cost averaging. I want to buy assets when they're at a discount. Now, this isn't financial advice. This is how I personally approach it. But in a recession, there's a massive transfer of wealth. The scared transfer their assets to those that have steady hands. Ultimately, the old saying, buy when there's blood in the streets, never has rung more true. That's what I'm going to do if a recession comes. Now, as we see asset prices continue to have massive volatility, whether you're buying an asset at somewhat of a discount or a massive discount, ultimately the devaluation of the underlying currency, the US dollar, is a guarantee. There is no way for the US government or the central bank, the Federal Reserve, to stop devaluing the dollar. And so if you're able to buy assets and hold them for long periods of time, the dollar will devalue against them. And ultimately, that's the difference between investors and those who hold no investments. It's an education gap. The investors understand that if I hold assets and not cash, I'm guaranteed to make money because the dollar will be devalued. But those who have no investable assets, about 45% of Americans, they still believe that you can save your way to financial security. Those are the people who get screwed in these scenarios. Inflation's at a 40-year high. There's a potential recession on the horizon. What you have to do is you have to get educated. You have to understand that investors win and savers lose. And you have to be prepared because if asset prices fall in any sort of recessive period, make sure that you're not the person who's running to something like the dollar, which only is going to get devalued at a faster rate as the government tries to stop a recession. Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.